Hello, welcome back. It's time for See Today Business. The Federal Reserve on Wednesday intensified its attempts to tame high inflation by raising its key interest rate by 3/4 of a point. The hike is the largest in nearly 3 decades and signals larger rate hikes ahead, which in turn would raise the risk of another recession.
The Federal Reserve raising its key interest rate by 3/4 of a point to intensify its drive to tame high inflation. The move was announced after its latest policy meeting will increase its benchmark short-term rate, which affects many consumer and business loans, to a range of 1.5% to 1.75%. The Fed's decision to impose a rate hike was an acknowledgement that it's struggling to curb the pace and persistence of inflation, which has been worsened by Russia's war against Ukraine and its effects on energy prices.
It is essential that we bring inflation down if we are to have a sustained period of strong labor market conditions that benefit all. From the standpoint of our congressional mandate to promote maximum employment and price stability, the current picture is plain to see. The labor market is extremely tight and inflation is much too high. Against this backdrop, today the Federal Open Market Committee raised its policy interest rate by 3/4 of a percentage point and anticipates that ongoing increases in that rate will be appropriate. In addition, we are continuing the process of significantly reducing the size of our balance sheet.
The unusually large 3/4 point hike in the Fed's benchmark short-term rate is going to have a lot of impact on Americans' finances. The hope is that by making borrowing more expensive, the Fed will succeed in cooling demand for homes, cars, and other goods and services, and slow inflation.
After setting expectations of a 0.5 point interest rate increase at this meeting, the Federal Reserve instead caught an audible earlier in the week and now have raised interest rates by 3/4 of a percentage point instead. What changed things were those disastrous inflation numbers that came out last Friday. The Federal Reserve trying to combat inflation that's at a 40-year high. They're behind the curve. They know it. And the only way they're going to get there is by taking these larger steps toward interest rates that are not stimulative to the economy, but can instead be used to bring inflation down.
Inflation has shot to the top of voter concerns in the months before Congress midterm elections, souring the public's view of the economy, weakening President Joe Biden's approval ratings, and raising the likelihood of Democratic losses in November.